people living in Canada, United States, wherever in the world right now, we're all suffering pretty much from the same affliction, which is called interest rates, fear of recession. Zach, people are, I don't want to say freaking out, but they're worried. And they're saying, what do I do with my money now? What's going to happen? Nobody can look into a crystal ball and tell them what's going to come this year, next year. Obviously, a lot of the banks come out and give all these statements, but it's all speculation at this point. Going into the year now, when your clients come to you or potential clients saying, I'm thinking about investing, but I'm so afraid of what's going on. I don't want to lose money. What do I do? Zach, what do you answer these people to alleviate their fears?
Okay, so I hope nobody's freaking out right now at this point because the freaking out should have come 5 months ago. I think now it's starting to set on people. It's funny you bring this up because we at the beginning of the year, a lot of the companies I work with have what we call their market outlook calls, right? And that's with what's our expectations for 2023. And a lot of what everybody is saying, which I believe the majority of it to be true. I don't agree with everybody wholeheartedly, but I think interest rates are going to slowly just not come to a halt because I can't, again, I don't have that crystal ball, but I think we're going to see longer periods of time in between rate hikes and smaller rate hikes. So I think the 25th of January, which is when we're supposed to have our next one, I think you're going to see a 50 basis point rate hike. I think maybe a month or so after that, depending on how inflation reacts, you're going to see a quarter, 25 basis points rate hike as well. But I don't think you're going to see that much more. I think there is going to be pain. I think there's going to be more pain now than before. Cost of servicing and total debt ratios have increased substantially, 3%, marginally speaking, which is what is that, 15% increase overall for most people. Which, doesn't sound like a lot, but it is a lot. I think they're going to start feeling it now. But I think if you've been able to survive the last year, really, I think you're going to be fine. Bond yields are starting to stabilize. And we know this because the high interest rate environment can only last so long, right? The average recession lasts 3 years. Are we in one right now? Are we not in one right now? That's pretty much where the debate lies, because this has been forced in a manner different than it has been in the past. So I think if you survive the next year, you're going to be fine. I think if you have cash and are looking to purchase real estate in the next 5-6 months, I do it, because the majority of banks are pretty consistent in saying that they think that housing prices, at least in the Ontario GTA region, are going to bottom out by April. Otherwise, I think you're going to be fine. And because interest rates are starting to stabilize and the prospect of interest rates going down again is there, you're going to see bond yields start to stabilize. And the biggest problem, aside from all the overspending and the market fluctuations, is that when you build a portfolio or you invest in any portfolio, you want to hedge your bets with fixed income, right? So you invest in equity, which is a more risky investment, and then you invest in fixed income assets, which are usually bonds, some form of debt that's issued, and you're expecting a corporation, a government, whatever it is, to issue this debt. And again, it's high credit, it's dependable. Everybody was expecting those bonds to hold their value and pay their value in a manner that they just haven't, right? It was an all down market. Equities went down, bond yields went down, bond returns went down, everything went down. So what you're going to start seeing now is bond yields increase, stabilize, and return to how they should be. The market may not be great, but bond yields should be better, especially because of the high interest rate and more stable interest rate environment that we're seeing.
Is it time to buy or sell off on Tesla?
On Tesla?
Yes.
Tesla's a whole other story, man. I was so hot on Tesla, but there's such a shortage for these lithium batteries and a lot of environmentalists, which, someone like me who thought mining for lithium batteries was better for the environment. A lot of people now, and again, we got to stay informed, maybe not before we were, but now we are. A lot of them are saying it's worse for the environment. And it's better that we just continue the way we're going, or at least find a better alternative, rather than spending exorbitant amounts of money buying new cars, manufacturing new batteries that are hurting our environment. So I don't know. I don't know which direction Tesla's going to go in. I know that it's really affecting their share price right now because the the responsible the responsible for your environment and again social governance, the ESG investors are really starting to gain traction.
So an example of like, because for the passive or non-investor, people like to watch these companies, Zach, and watch what's going on with their stocks, and they get very interested, And I'm going to combine now your love of stocks and my love of wrestling. So a classic example, you got WWE and what's going on over there. The chairman of the board was out for allegations of all sorts. And all of a sudden, he comes back into the picture, says, because I'm the leading shareholder, so I can do this. And I'm going to go back on the board and I'm going to fire off two other people, bring on my board people for the sole purpose of bringing this company for sale. The second he does this, the stock goes up by over 20%. Is this a nice media finagling, or is he actually serious, you think? It's quite interesting how people know what statements they can give and they can inflate share prices in an instant, eh, Zach?
It's a problem. And it's the reason that our markets are acting like teeter-totters over the last few years, right? People believe everything that they hear and they shouldn't.
Remember the sheep theory, Zach?
Uh, they shouldn't believe everything they hear. And the problem with that is that they're event-based investors, which isn't always a bad thing. I started off as an event-based investor, and I made some good money doing it. But you have to start looking at the underlying facts. Their cash flow statements, their balance sheets, what kind of investments they're making back into the company. I could see value into why they would sell WWE now, but it's not happening. Vince McMahon will, as in the wrestling fan in me, Vince McMahon will die with his share of WWE.
Well, the rumor is like this. So you got the Saudis where they formed their own golf league and they're paying people hundreds of millions of dollars, right?
Yeah.
So he sells it to the Saudis for billions of dollars, but as part of the condition, he has to get creative control back. So he gets his cake and eats it too. That would be hilarious.
Too good to be true. Enjoy. Yeah.